What is going on, guys? Today we're going to talk about two Yieldmax ETFs that you can purchase and pretty much create a bi-weekly income stream from their distribution. So if you're not familiar with what Yieldmax is, definitely go check out their website and all of their different funds that they offer. They have several different funds out there. They did just recently change their distribution schedule. Pretty much all of their funds pay monthly, but they do pay out on different weeks. So you can buy different ETFs to kind of construct different payout schedules and portfolios. So the two we're going to talk about today are Tsly and Cony. So looking at the spreadsheet here, Tsly is currently trading for $14.39. So to purchase 1,000 shares, it's going to cost you roughly $14,390. And according to their most recent dividend, they paid 59 cents, 59.86. So almost 60 cents there. But 1,000 shares would pay you $598.60 per month, the first week of every single month. So pretty cool there. I'm not sure why. And then just kind of adding up, I broke them down per 1,000 shares. So if you owned 2,000 shares, it's going to cost you roughly, $28,000. But pretty much everything is just doubled, right? So 598, you double that to 1,197, and then 3,000 shares is going to pay you almost $1,800. And then the bottom one is like theoretically, if they can pay closer to $1 in distributions per month. So let's look at Tsly real quick over here to the right. So according to this website, I think they just take the most recent distribution. So they took 59 cents and kind of multiplied it by that. However, as you can see, this number fluctuates a lot. And they've definitely had some months where they paid over $1. They've paid months definitely below $1. But here's some kind of the data. So if they could, theoretically, get to that dollar per month distribution, whether it's averaged out over the year or whatever, if you can get to 1,000 shares, you can make $1,000, every month from this one ETF. So yeah, then just kind of double it across the board. If you have 2,000 shares, 3,000 shares, 4,000 shares, and so on. And then the same thing with Cony. Cony is different though. They pay the third week of the month. They are a part of Yieldmax's Group C ETFs. And then the same kind of thing. So they're targeting Coinbase. So ticker symbol COIN, Coinbase. We're going to look at the total returns here in a minute. But same kind of idea, right? So if you buy one share of Tsly and one share of Cony, you'll get paid the first week and the third week of the month. Kind of like a job almost. But pretty cool how they did implement this distribution schedule where you can kind of break up your payments and break up your distributions by investing in different ETFs. Same kind of idea though. They're currently trading for $16.96. So to purchase 1,000 shares of their fund, it's going to cost you almost $17,000. But their distribution, this most recent dividend that they paid was much higher than Tsly's. So you're going to get much higher distributions for Cony at the current time of this video. But as we look at Cony as well, all their funds, since they are not really dividend based, they're more option premium based. It's going to vary a lot, depending on what the market's doing. They had one month where it was almost $2.80. So they've had some huge ones with Cony. Cony's IV is definitely a lot higher than Tesla's. So, a lot of the option premium is based upon the underlying's IV. So just kind of keep that in mind there. But same idea, just doubling every column here. You go from 1,000 shares to 2,000 shares. It's going to double to $33,000, then 50,000, and then lastly at 4,000 shares, $67,000. At today's price is how much it would roughly cost. And then this last column, it's kind of just adding the two. So if you wanted 1,000 shares of Tsly, 1,000 shares of Cony, it's going to take roughly $31,000, 350, and then just double it from there, 31 to 62 to 94 to 125. And then if you were to get best case scenario, if they both can average $1 a month, you can expect to, roughly receive almost $8,000 a month in income from these two funds. It's going to cost you over $125,000 to construct a portfolio that consists of 4,000 shares of both of these. But that's kind of, best case scenario. I think, if they can try to continually get to that $1 level per month, that's kind of what you can expect. But just keep in mind, these funds, as you can see with the data, they vary a lot. So you can make illustrations all you want, but just keep in mind that these numbers are going to vary quite a lot there. So let's look at, I'm going to blow this up real quick. So this is a website called totalrealreturns.com. So what we're comparing here is the total real returns of the price return plus the distribution. So SPY, obviously, the Spider S&P 500 ETF up 23.28% year to date. The market overall is having a tremendous year. Looks like Tesla did just finally pass SPY, so that's pretty big. Tesla's been on a tear this past couple of months. It's been just going straight up. But you can see, you would have been better off just buying the underlying. And this is the case almost every single time, right? If you would have just bought Tesla itself, bought and hold dollar cost average into Tesla, you would have been better off. And then same with Coinbase as well. They're up 51.07%. So they are ripping up as well. Obviously the whole crypto market is doing ever since, the past couple of months has been just on a tear. But yeah, these are the breakdowns. You're up 27%. So you're still beating the S&P 500 with Cony. You're lagging it with Tsly. And yeah, so that's kind of some other metrics you look at. But yeah, guys, that's going to be it for today's video. This was just talking about how you can construct a 2-fund portfolio using Yieldmax's funds, Tsly and Cony, to construct a portfolio that pays you every other week. Every other Friday, you can get distributions from Tsly and Cony by investing in these 2 funds. So stick around. We're going to make some more videos on these funds and kind of analyze them a little bit further. But as always, do your own financial research before investing into the stock market. Don't blindly follow these funds or anything. Just do your own research. Go to their website, look at their fund information, and definitely do your own analysis as far as if it makes sense for you to invest into these types of funds. If you guys are still here, please subscribe, please like down below. It helps us grow and reach more people out there. And yeah, guys, let me know what you think down below. Are you a fan of these funds? Do you prefer to sell options yourself? That's kind of where I'm at. Like I definitely see a place for these funds, but currently where I'm at, I do like to be a little bit more active with my investments. And, Tsly and Cony, their biggest objective is to create income. And for me personally, I want price appreciation as well as income. So I like, constructing my own covered call, selling a little bit out of the money, selling in the money, but profitable on the underlying. And then also they're not actually purchasing Tesla per se. They're creating synthetic positions. That's something else you'll have to kind of analyze and look at too whenever you start to look at their holdings within their funds. They're making synthetic positions. So that's another tactic they use as well. So that's going to be it though. Thanks for watching. Please like, subscribe down below.